The pound has never been so oversold, with the cable in particular standing out as one to watch. Ipek Ozkardeskaya, London Capital Group. Well, on Wednesday, economists and investors alike will be sifting through the minutes of the Fed's July meeting for clues over a potential rate hike. Recent robust jobs data has led to increased expectation, though what are you projecting?
Well, the expectations around the Fed have become volatile because they have become very fragile. The Fed's latest meeting minutes will likely leave the door open for a September action. There is a clear divergence between the U.S. economic fundamentals and the rest of the world, which is visibly shifting towards looser monetary policies. So this is the case for Japan, for UK, for the Eurozone, even Australia and New Zealand, and you name it. So in this context, the Fed is in a very delicate position. If the Fed does a premature hawkish move, it could have disproportional economic implications for the U.S. Therefore, our projection is that first, September is still too early for a rate action, not because of the U.S. itself, but because of the unfavorable global macro picture. Second, the market prices in a 25 basis points hike in December at less than 50%. And third, if that was to happen, it could then involve the possibility of a step back in the first quarter in 2017. So we think that at some point the Fed will be softening the tone a bit.
Okay, well, later in the week, we have the ECB's July policy meeting minutes, which should give some guidance over the damage of the June Brexit vote to the Eurozone, as well as regional banking concerns. What then do you believe to be the most pressing economic matter for the ECB?
So we do not expect any surprise from the ECB meeting minutes. The ECB has been following a quite clear strategy. It has been trying to revive growth and bring back the inflation. Now they have the crisis with Italian banks and the additional Brexit factor in the equation, which, in our view, does not change the ECB's global stance regarding the Eurozone's economic outlook nor the monetary policy. So at the press conference following the ECB's latest policy decision, we could have an insight into what the ECB's governing board think about these pending issues. I believe that the ECB remains well positioned on the dovish side of the fence and with less weight on its shoulders in terms of distorted sovereign rates, though, since the Bank of England triggered a rush into their gilt markets, it could somewhat counterbalance the appetite for the Eurozone bonds and stabilize a little bit the ECB's dovish strategy. So that's a good thing. But we see the euro stable and soft. The parity, so the one-to-one level, is now for the euro pound for the end of the year, while against the US dollar, for the euro, we do not see anything alarming in between a large range of 108 and 115, and it all depends on Fed-related volatility.
Okay, and lastly for today, are there any other key economic indicators through the trading week which you'll be keeping a close eye on?
So as a London Capital Group, of course, it's going to be UK-related data. It's a big week for the UK, and we see the cable testing 129 level in Asia. The pound market has never been as oversold. And week after week, we see investors building up on their short positions. Now, this week's upside risk could be hidden in this inflation data. We have July inflation figures due on Tuesday. Of course, we don't expect to see a knee-jerk impact of the Brexit, and the expectations remain very soft, with a monthly deflation of 0.1% as consensus. But the UK's inflation data will inevitably become a closely monitored data from now on. So for July, although the expectations are soft, a stronger than expected read following the Bank of England's looser policy action could bring the lower limits of the BOE's monetary strategy on the table in terms of the bank rate and also the asset purchases target, and that could trigger an upside correction to reverse the negative trend in cable, at least temporarily. Of course, there is a good potential for recovery in this market. We can rapidly see the cable bouncing above the 130 level and just like gaining some field above 130, given how short the market has become. So I think it is worth watching.
Thank you, Ipek. Be sure to check back to see how these market movers develop throughout the week, and check back with Kai Skalil for our wrap-up on Friday. See you soon.